Today I'm going to teach you how to trade without any indicators. I'll give you my own trading strategy that has a win rate of up to 80%. These trading methods I'm about to teach you have been proven and back tested for decades and will continue working for decades onwards. So without further ado, let's just jump right into the chart. So to learn my no indicator strategy, we need to know these three things first. So the very first method is support and resistance, or some people call it supply and demand. Once you see a couple of touches in between the area of support and resistance, this means it's a strong area level and you can potentially be buying off the support and wait till the market moves up to the resistance, and vice versa. We can find selling pressure of the resistance and enter the trade for a nice little short towards the support area line. Not only that, we can also trade a nice little breakout. So once a strong breakout happens, when it breaks either the support area level or the resistance, in this case the support is broken, we can start entering the trade at the very top, because usually it retests the previous area zone with a push exhaustion type of scenario. So that's the push, this was the exhaustion. We should be now continuing our downtrend, in this case moving towards the downside for a potential retest or even a further continuation towards the downside. Now for the second, we will need a nice little trend line. As we can see, one touch, two touches over here, this confirms a nice trend towards the upside. You could potentially enter the trade long just over here and it pushes towards the upside straight to your profits. You can continue entering trades after it retests the previous trend, so it pulls back over here, enter again, and as we can see, it eventually just moves further up. However, it's not the only way to trade trend lines. You can also wait for breakouts as well. As we can see, a breakout has now occurred. We can either enter the trade straight away or wait for a pullback. Really dependent. I would probably wait for the pullback, but in this case, we don't seem to get one. So depending whether you entered after the breakout, it would have been a beautiful trade. I always recommend a breakout and an exhaustion back to the previous area of sensitivity, then entry for the most profitable and safest trade. However, breakout trading works as well. I just don't think it's as efficient as waiting for a confirmation then moving down. The third one I like to call fail swings, where pretty much the market is heading towards the downside and always making a new low. It's like a little stepping stone over here. So lower low, lower high, lower low, lower high, moving like this. Again, new lower low. The market is currently pushing towards the downside and slightly losing momentum. And as we can see, this candlestick is not closed below this area of support. You could be expecting a breakout, and look what happens. A nice bullish engulfing candlestick comes out. Now, you couldn't really predict this bullish candlestick. You didn't know whether it's going to continue moving up or down. However, when this does happen, this is a nice fail swing. And then you can enter the trade long with this bullish engulfing candlestick. So if you combine what we learned, there was a nice little trend, kind of squeeze pattern over here, bullish engulfing candlestick, long position over here. You can potentially kind of make this trade really good. So let's see what happens, and it continues moving up and then eventually retest the previous area zone, which is totally fine. This was just an example where we managed to reach around 82 pips before the market did turn around. Now that you learned these three things, you're ready for the main trading strategy, which I love to use with no indicators, but you require to know chart patterns. Now trust me, it's not that scary as you think. If you have no indicators and you love trading price action, this is the best way to do it. So this over here, what do you think this chart pattern will be? Well, it is a rising wedge at the moment. Now the price is currently squeezing in between two area levels. Once it manages to break this area zone, which it currently is, if we just zoom in, we can draw our area of support and resistance. Boom. This was a nice little support over here, went up, making lows over here. So the price is currently squeezing. What's happening with this newest candlestick? It's actually breaking the line. It's likely now gonna continue moving down. Now, if we simply measure the top and bottom of the wedge and drag where the actual breakout happens, so just somewhere over here, make the wedge slightly smaller. Around here seems pretty good. So that's around 86 pips potential profit because of this veg. So what do? Well, you have your take profit goal now, right? You don't need to calculate anything. The rising veg has already broken. You have your candlestick. You want to aim for the take profit of what it actually is, what the veg is telling you, and you can put your stop loss just above, all these previous areas of sensitivity, right? So make it higher. There we go. You have some space for movement, and this is a 2.59 risk to reward ratio trade, and you don't require any indicators at all as long as the market direction is in your favor. We're looking at euro US dollar. Overall market direction for the euro US dollar is towards the downside, as we can see. Even on the monthly time frame, it has been dropping down. Yes, there was a little spike up, but the overall market direction has been bearish. So if we simply come back to the entry time frame, as we can see, the market just continues and drops towards the downside, and eventually, yes, reaches our take profit level. And what's funny to me, after the veg has formed and we calculated the take profit level from the top and bottom of the veg, that's where the price started to consolidate, because these market areas are looked at by a lot of big players, right? They know there is this veg over here. Mostly algorithms are trading, but their algorithms are smart enough to notice that there is a rising veg over here. Hence the breakout went towards the downside and took these trades further down, started to consolidate because they started taking their money, right? That's why we are seeing some buying pressure. The money has been taken over here, the trade has ended, we are looking for a new one. That's the way it works. Now, of course, we could potentially enhance this trade by waiting for a pullback and then entering the trade, but the pullback didn't happen, so you would have missed out this trading opportunity, which is totally fine. Sometimes you rather miss out than enter the trade that you're not 100% sure on. Now take a look at this. This is called a falling wedge. The market is currently squeezing towards the upside and the downside. This utilizes especially one of the third methods. As we can see, fail swing over here happening. What's gonna likely happen? Bullish pressure is coming up, right? Because we had this nice little squeeze, but we didn't have a new lower low. So once you see this price pattern, you can prepare, and if it breaks this area zone, then you know that all you need to do is measure the top and bottom of the veg that you had just over here, where the actual breakout happens, and then you can measure your take profit. So let's see. Boom, the breakout happens. So 158 pips potentially for this trade to move towards the upside. That is your take profit level. That is your maximum take profit level over here. So long position, we want to put our stop loss just below the previous area lows. Some people say you want to put stop loss below the veg, which is kind of right actually, but I would say since he hasn't broken over here, this seems pretty damn good for a nice little risk to reward. Put this up here and we are golden. So in this case, 2.3 risk to reward ratio. We are entering off a nice bullish candlestick, engulfing candlestick even better, and we should be able to continue moving towards the upside. And that's the fail swing we talked about earlier. As we can see, broke out, we can enter the trade, and then it continues moving towards the upside. But maybe you haven't spotted one little thing. There's actually another chart pattern inside the chart pattern, which makes it even more powerful. And what do you think this is? This is the double bottom. So the first bottom over here, the second bottom over here. It usually looks like a W letter. So where the middle line is your neckline. And if that neckline is broken, so if we just measure it, boom. So we could have potentially entered on the falling wedge or the double top. We can also measure the double top. 85 pips is telling us for take profit. So you can measure it just over here. So you could have potentially closed some of your position on 85 pips take profit, then eventually ride the 140 pip wave from the rising wedge or the double bottom pattern, or the W formation in this case as well. This is very simple price action. You don't even need complicated indicators. Indicators lack and tell you what the charts are telling you anyway. So you don't really need indicators. You can trade without them. I love using moving averages because it just makes it easier to spot, but you can definitely naked trade the Forex markets or any markets for that matter and make it work. Another thing, you don't even have to swing trade per se if you see these setups. Let's say we see this hourly wedge and it's going towards the upside, right? But we want to maybe scalp our traded position. So head over to the 15-minute time frame and just find relevance what's going on over here. So let's just delete that. So it's currently moving towards the upside because of the wedge and the double bottom we talked about earlier. So what do we have? We have a pullback over here. So push, exhaustion, pullback, right? What do we have over here? What's so important? Well, it's a fail swing. One more time. Look, a nice little supported area. Fail swing over here doesn't make a new low. Eventually, a pin bar candlestick signifying buying pressure and then a engulfing candlestick to confirm the trade. So you can potentially enter the trade straight away. Put a very small stop loss around 15 pips, 2-to-1 to even 3-to-1 risk to reward for a nice little scalp trading opportunity. Of course, if you're scalping, you're going to be closing off very, very quickly. This is just an example, but it works the same way. You can trade with the overall market direction. So the higher time frame price action was definitely bullish. You can enter the trade on the lower time frames, finding these right setups, waiting for these right setups, and then boom, enter the trade and you're golden. Trust me, it works, and it works really, really well. And if you don't know where to find the patterns, I actually have a free ebook you can download, or you can buy my free ebook course, which is amazing. 10 years of experience. I added a lot of work into it, 300 pages. Or you can join my VIP Trading Signals group. We are absolutely dominating the markets. We are preparing for New Year and we're going to absolutely smash it. It's also 50% off lifetime. And yeah, if you don't understand something, give me a comment and take care, Lions. Have a wonderful day. Stay safe and goodbye.